let's come back from the break, please. Ms. Katz, if you would, please, I believe we're moving to the next topic.
Madam Hearing Officer, I believe Mr. Heiser said that Mr. Dunham would have some rebuttal.
Ah, that's right. I'm sorry, Mr. Heiser, for forgetting.
That's okay. It's been going on for a while.
Is this a good time then for Mr. Dunham?
Yes, I think Mr. Dunham should still be with us.
Yes, I am. I hope I have a better microphone now.
Seems a little clearer. Keep your voice up, though. Go ahead.
I will keep it up here.
Thank you. Mr. Heiser?
Thank you, Madam Hearing Officer. Mr. Dunham, welcome back for your rebuttal. Just a reminder that you remain under oath in providing this testimony. Did you hear the testimony of Ms. Day and Mr. Palmer?
Yes, sir, I did.
And did you hear their discussion of the annualized cost at $215 million per year?
Yes, I did.
And is it your understanding that that would be the cost basically over if you were to take the capital costs and divide it over 15 years instead of a shorter period?
I'm actually somewhat confused by what they were presenting. At one point they said the costs are 1.7 billion. At one they said at 1.1 billion. If I take the 210 million and take it across 15 years, it's 3.2 billion. I'm not exactly sure.
Hold on, Mr. Dunham. I'm sorry.
Yes, ma'am.
I think the court reporter was able to capture very little of that.
Right. I need, listen, Mr. Dunham, I need you to look up when you speak. Part of mine, I read lips. I need you to slow, please. And
okay, I'm sorry.
I'm not an economist, so please don't go so quickly. Thank you.
Okay. The answer to the question was, I'm not sure. There were a number of different cost figures discussed. One was 1.7 billion, one was 1.1 billion, and then there was a discussion of, I think it was 210 million per year over 15 years or maybe 5 years. I'm not actually sure what the cost number is.
And did you estimate if you took the 15 years times the 210 million, what type of number would that give?
It comes up to 3.2 billion
okay.
in nominal dollars.
And did you prepare some rebuttal testimony in response to the written rebuttal testimony of Mr. Palmer, Mr. Powell, and Ms. Day?
Yes, sir, I did.
And did you prepare some slides to help walk us through that rebuttal testimony?
I do have some slides if I can make the sharing thing work.
Okay, let the hearing officer re-enable you.
Madam Hearing Officer, I just want to ask a quick question. Were those slides also distributed?
Again, we got a number of slide presentations last night sent to us via email. Pam, I suspect would have forwarded that to you if she did not. Pam, will you confirm that you either forwarded it to the board or do that now? She may have stepped away. Can I just ask, Madam Chair, did you get any emailed slide presentations last night?
No, we didn't, and so that's why I was just asking, just so I can confirm that the board and my fellow board members have access to that as well.
Okay, so I will forward those to you.
We will be happy to wait, Madam Hearing Officer, until you can get that sent.
Okay, hold on just a second.
Mr. Heiser, Was this PowerPoint, was the slide included in the same Dunham summary of testimony?
It
Okay,
is.
thank
It's the
you.
back part of that testimony.
Okay, thank you.
So, Madam Chair and other board members, it will be in the Dunham PowerPoint, and it will be starting at the slide called Sir Rebuttal, which I'm not quite looking at the thing, it says is slide 7 in that packet.
I believe we do have that slide packet.
Great.
Pam sent it around earlier today.
Okay. Thank you, Member Honker. Ms.
I won't
Orth, you
resend
are,
it then. Unless, can you find it, Madam Chair? I believe it was originally sent by Brandon Curtis.
Yes, yes, we got it earlier today.
Okay, great.
Thank you.
Go ahead, Mr. Heiser.
okay. So, Mr. Dunham, did you prepare some responses to the questions and concerns that were raised by Mr. Powell, Mr. Palmer, and Ms. Day?
Yes, sir, I
To your
did.
model?
Yes, I
Would you
did.
like to walk us through your response to some of those concerns?
Of course. Just in summary, in general, there were 3 concerns with the work that we conducted. The first was that our well count number was not correct, which is I take full responsibility for it. I've looked over the data and I definitely interpreted it incorrectly. The second was that our cost numbers were high, and the third was the timing that we used to put the numbers.
I'm sorry,
that
Mr.
we discounted.
Dunham.
Yes, ma'am.
Mr. Dunham, your voice has gotten very muddy again, and I think you're speaking a little too fast.
I'm sorry.
Is it possible, wait, is it possible for you to call in on the phone? We've had much better luck with people calling in on the phone number when this happens.
I could do that. Would that be okay?
Let's try that, shall we? Would that be
Could
okay?
somebody give me is that on that same sheet?
I believe, Mr. Dunham, that according to Vice Chair Trujillo Davis, if you go to the 3 boxes, the 3 little dots, it may give you under switch audio an option to have a phone number call or a number to call.
Let me. Somebody's calling in.
So on my screen, it's right next to the red X that would take you out of the platform.
Got it.
Okay.
Oh, I'm not getting that. Terribly sorry. I have to stop sharing the screen, I think. Oh. Okay, now I'm looking for 3 dots, yes. Switch audio,
Yes.
calling. Got it, I will be right back.
Go ahead and leave your computer on because we'll still want to see your slides.
Am I here?
Yes.
Okay, I hope you can hear me now.
Yes. And if you can, yes, the court reporter has her thumbs up. And so if you could put your slide deck back on the screen, we will be ready to go.
All right, I'm terribly sorry about that. Okay.
And
Am I
so
back?
you were saying that you had responded to, that there were 3 concerns that you had seen expressed, and you were walking us through your response.
Correct, yes. The first concern was that the number of operational wells that we included in the model was incorrect. And that is actually, I looked back at the data and that is my mistake. The second was that we used a 5-year period for our net present value rather than a 15-year period, which the reason EPA uses that is because that's outlined in the OMB circular on regulatory impact analysis. We use 5 because that's when most of the operational production of most oil and gas wells occurs. And then the third was that we had actual cost numbers that were not correct. So I really ran the analysis using the 47,937 oil and natural gas wells that were in Exhibit 19 on page 3. I believe that was ERG's number, though it's close to what Mr. Powell was discussing. I then used an overall cost number of 1.7 billion. I understand now it might be 1.1, it might be 3.2. I used 1.7. And I ran the same exact model, and I came up with a very different loss number, obviously because all models are based on assumptions. So the new loss number would be about 41% of currently operating oil and natural gas wells would become unproductive under those assumptions and the other assumptions in the model. It would result in a reduction of about 7% of oil production and about 13% of natural gas production in the state, which would represent about a 9.5 reduction in production in value terms. And that would have still a pretty significant economic cost on the state. There would be about 2,000 jobs lost, about 423 million in reduced economic activity in the state, and a loss of state and local taxes of about 14.3 million a year, again, not including the royalty payments. And if I can get this to work. So just in general, just in response, the complaints that were made of my analysis, which I very much appreciate. It is difficult to analyze something when you don't have the models in front of you. But my analysis relied solely on cost data provided by actual oil and natural gas companies via the New Mexico Oil and Gas Association. I believe other witnesses have testified or will testify about that the ERG and MED cost estimates may not be accurate. I'm not gonna, I can't tell you either way. I'm not an engineer. But even using the well data and cost numbers that were in the testimony, the impact is still quite significant, and the rule will cost somewhere between 1.1 and maybe $3.2 billion. The models that we use are very standard models. The cost models are all developed based on Implant's input-output model, which is widely used. It's how you develop production functions. I've been doing this for 30 years. It's how this is done. And all of my data, all my models are open architecture. Nobody called me and asked me about any of these assumptions or where the data came from, but it is, I'm more than happy to answer questions about that. So that's the sum of my surrebuttal testimony.
So basically, in summary, you took the model, you took the revised well counts that were provided by the ERG folks in their rebuttal, you placed it in their model, and then based on that, this would be the new calculation that you have on the slide just before this.
That would be, yeah, these numbers on this slide here.
Okay. Thank you, Mr. Dunham. I guess, Madam Hearing Officer, I think it might be useful, he talked through all of these, but it might be useful to mark this as NMOGA Exhibit 57, just so that the board would have it in tabular format rather than having to try to read through it in testimony.
All right, thank you. Let me pause for a moment. In the event there are objections to admitting this as Exhibit 57. Hearing no objections, Exhibit 57 is admitted. Thank you, Mr. Heiser.
And I am reminded that I had one more question. So, Mr. Dunham, there was some discussion earlier about doing a larger cost-benefit analysis that looked at the broader implications of a rule like this from a societal basis. Did you refer to that as more like a regulatory impact analysis?
That would be a regulatory impact analysis. For large federal rules, those are required by the Office of Management and Budget. And there's a whole format on how those should be conducted, the kinds of assumptions that are used, what needs to be presented, and a lot of what was being discussed in the rebuttal in the earlier testimony had to do with doing a regulatory impact analysis.
Right. And in your experience, is that typically done by the regulated industry, or is that usually done by the governmental agency proposing the rule?
The federal government requires it. I'm not honestly sure about New Mexico's requirements, but it's usually done. It would be done by those proposing the rule.
Okay, thank you. That does complete my testimony now, Madam Hearing, our testimony with Mr. Dunham today.
Thank you, Mr. Heiser. Ms. Katz, do you have questions of Mr. Dunham?
Should I stop sharing my screen now, or?
Well, let me ask Ms. Katz, will you be referring to the slides?
No, I will not.
All right, it seems to me we could, there you go. Thank you. Go ahead, Ms. Katz.
Thank you. Thank you, Mr. Dunham. I just have one question. Are you aware that the New Mexico Air Quality Control Act does not require the department to do a regulatory impact analysis for a rulemaking under the provisions regarding ozone control?
Yeah, as I said, I'm not sure about New Mexico's rules. That the federal government would have to do one for this, but I'm not sure about any individual state.
Thank you, Mr. Dunham. That's all I have.
Thank you. Ms. Fox, do you have questions?
Thank you, Madam Hearing Officer. I have a couple. Hello, Mr. Dunham. My name is Tanis Fox. I represent a number of organizations in this proceeding, and I was wondering if you could put up the slides that you just had up, please.
I can do that, I believe. This one?
Yes, thank you very much. First, I'd like to ask you whether you accept as accurate Mr. Powell's well count number of approximately 47 or 48,000 wells that this
I would think
that the EIB's rule would apply to.
Yeah, yes, ma'am. I think Mr. Powell would be the expert on that particular count.
And then did you, based on that new well count, did you redo your total cost number from table 1, which you estimated the total cost for the EIB rule would be $3.8 billion?
Not for this particular rebuttal. I could do that. I used the 1.7 billion, which was the number in the other in the was it ERG's testimony.
So you're accepting as more accurate ERG's initial estimate of $1.7 billion before they recalculated based on amendments they're now proposing?
Now, I have no idea if their number is accurate or not, ma'am. I have not seen any of their work.
I thought you just said that you're relying upon ERG's $1.7 billion estimate.
Yeah, that was in the rebuttal testimony to prepare this particular slide and this particular analysis. I relied on that number. Though they said today that was not a correct number.
Right, you understood their testimony that they had recalculated that initial number based on amendments that they proposed since they since their initial direct filing.
Yeah, yes, that's what they said.
Okay, so you're relying on the 1.7 billion number, but you're not saying that that number is accurate. Is that what you're saying?
Correct. I have no idea if that number is accurate or not.
So then, based on the new well count that you have testified is more accurate or is accurate, you have not updated your initial costs of $3.8 billion. Is that correct?
No, ma'am.
If you were to do that calculation, approximately, what would your new cost estimate be?
Approximately?
Correct.
Approximately, it would be probably somewhere around $2 billion, maybe a little bit more.
And in order to get that estimate, would you decrease your $3.8 billion number by about 47%? Is that how you would arrive at that estimate?
I don't know what the percentage would be. It depends on the split between oil and natural gas wells.
Thank you. That's all the questions I have.
Thank you, Ms. Fox. Ms. Paranos, I see you on screen. Do you have questions?
Thank you, Madam Hearing Officer. I just have one line of questioning. Mr. Dunham, you may have gone over this before, but I just want to be crystal clear. Did your analysis take into account any of the saved gas that would accrue to operators if they employ methods such as leak detection and repair, for example, that can in some instances ensure more gas is sent to a pipeline rather than vented to the atmosphere?
Did I include any revenue estimates you're saying from that gas?
Correct. Any
No, I did
revenue
not in this
estimates from
analysis.
saved gas?
No,
Thank you. Sorry to talk over you. Okay, I think you said no. Thank you.
I said no. I'm sorry.
Thank you. Mr. James.
No questions, Madam Hearing Officer.
Thank you. Ms. DeVore. Mr. Nyquist.
Yes, I just have a few questions, Madam Hearing Officer. Mr. Dunham, my name is Matt Nyquist. I'm here on behalf of Wild Earth Guardians. I just want to clarify a couple things. I might have the wrong understanding, but you did admit that you made a mistake in the number of wells you used as an input that would be subject to the rule when you ran your model initially. Is that right?
That is correct.
Okay. And the surrebuttal testimony that you have up on the screen today, that was shared to all the parties and late last night. Is that right?
I'm not sure when it was sent to the parties. That was, I believe, done by counsel.
Okay. What did you create this surrebuttal PowerPoint before today?
Yes, I did.
Okay. So did you understand that you used a mistaken number of wells in your modeling before today?
Yes, I did.
Okay. And yet this morning when you provided your testimony to the board, you did not indicate to them that you understood this mistake at that time. Is that right?
Oh, no, sir. I did say that my number was not correct.
Oh, you did this morning?
Yes, I did, sir.
Okay. Thank you very much. That's all the questions I have.
Thank you, Mr. Nyquist. Mr. DeSalen, do you have questions of Mr. Dunham?
I have no questions. Thank you.
Thank you. Mr. Rose.
No questions.
Thank you. Mr. Jano.
No questions, Madam Hearing Officer.
Thank you. Mr. Boutsier.
No questions.
Ms. Gutierrez.
No questions. Thank you.
Thank you. Mr. Colclasher.
No questions. Thank you.
And Ms. Witherspoon.
No questions, thank you.
All right, thank you very much. I'm going to turn to the board at this time for their questions. While I'm doing that, in the event you are an attendee rather than a panelist, and there's a question you would have for Mr. Dunham, please reach out in the chat. Madam Chair, do you have questions of Mr. Dunham?
Thank you, Madam Hearing Officer. Appreciate that. Mr. Dunham, thank you again for coming back and clarifying some points that were discussed earlier by other witnesses. I I just wanted to go back to slide number 8, which is the one you're on. I had a quick question. Here it's on slide number 8, it says that there's so you have a loss of operating in oil and gas wells. And I understand in previous testimony that there's a question about how the structure and the analysis is done. But can you explain to us right now how you translate the cost to industry and how that results in your calculation of the loss of operating oil and natural gas wells?
Yes, ma'am. We're still sharing the screen, right? When we built this model, we broke down the costs of oil and natural gas development, 2 separate industries, into 7 categories: exploration, permitting, drilling, completion, production, transportation, and remediation. So that's the life cycle of a well. The model's unit of analysis is physical wells, holes in the ground. So everything's based on a per well number. The number of wells, oil and natural gas wells in New Mexico, are basically lined up from the least productive, what was identified as a stripper well, to the most productive. And that's data that we got from the EIA, the Energy Information Agency. And that is put into a big matrix. And the costs and the revenues from those wells based on the price of petroleum, the wellhead price, are each other. And some wells are profitable, some are not. And this whole matrix of every individual well is developed. We then take this cost number, which in this case basically goes into the production side, and we shock the system with that new cost so that our costs go up while our revenues stay the same, basically. And some wells become non-productive. They become not economical with those higher production costs. And what the model does then is it starts to close those wells. As you close those wells, your stability ratio goes up in the industry, and it closes wells until it matches the profitability ratio at the beginning of the exercise. So it would be the industry holding itself harmless, basically.
Thank you for that explanation. That's helpful to understand. I also want to go have another question. In the assumptions from the data from the 10 surveyed companies, were the inputs an average of the data from the 10 companies, or were they the highest point or the lowest point, average or median value?
They were both average and median values. We used average values when the distribution of answers was fairly normal, fairly tight. When there were outliers, your averages get goofy, right? So, if you average me and Bill Gates together, our income is billions of dollars. So you don't want to use the average then because it's skewed. So in those cases, we use a median, which is the middle value.
Thank you for that further explanation. And back to slide number 8, the significant economic loss, excuse me, chart. And go ahead. Oh.
Was it this one?
Yes, yes. Sorry, I have multiple screens up here. So in a similar chart, in the sentence in the report. So in this chart, basically the number in table 9 of the report went from about 22.8 million down to 14.35 million or 36 million, right?
Yes.
9.
Yes, I believe so.
Okay. So, and then that
It's roughly half.
Yeah, yeah. And then that 22.86 million reference in your table, there's a sentence above that on in your report on page 8 that the state economy would face a 674 million loss, and then
Correct.
and then the state and local taxes would fall by 2.9 million. And so I'm trying to draw a connection back to, were you able to calculate the state economy loss, that $674.2 million loss, in relation to also the adjustments you made for the impact to state and local businesses and personal taxes?
Yes, ma'am. Based on these assumptions on this slide, the loss to the economy of the state would be about $423 million.
Okay, thank you for that clarification. Thank you so much. And real quick, one follow-up. So included in that 423 million, can you just remind me what's included in that assumption or that calculation? Is it
Sure.
taxes and additional losses?
No, that's economic losses. The taxes are a separate number. That's the 14 on this table. That's the $14.355 million.
Okay.
The 423 is a loss in sales, so to speak.
Oh, okay. Loss in sales of oil and
Yeah.
natural gas. Okay.
Yeah, roughly sales.
Okay. All right. Thank you so much for that clarification, Mr. Dunham. That's all I have for right now, Madam
Thank you, ma'am.
Hearing Officer.
Thank you, Madam Chair. Vice Chair Trujillo Davis, do you have questions of Mr. Dunham?
Yes, thank you. I do have a couple of questions. Mr. Dunham, did you say that your numbers didn't account for loss of royalties paid?
Correct.
Okay. Is there a reason why you didn't include that number? It seems like it would be a significant number.
The royalty payments are honestly not in the model that we built back in 2018. So they just weren't in there, and that's what we were asked to, we used as our base.
Okay. Thank you for clarifying that. And the other question I had was, I think you mentioned that you pulled the well, if I have this correct, you pulled the well number data from EIA and not from the OCD?
This 47937 number?
Yes.
I used that number from the ERG number.
Okay, and I believe, and I apologize, I forgot the gentleman from the OCD who testified, his name, Powell?
Brandon Powell.
Yes, Mr. Powell. I apologize. We're starting to get a lot of names in this hearing. But he gave some different numbers for the OCD, and I'm just curious why you used EIA versus OCD data. Was there an can you kind of just flesh that out for us?
To be quite honest with you, I had totally screwed up my interpretation of their report that was online. So I didn't want to do that again. So I just took this number out of the testimony from ERG. It was very close. It's a couple of thousand wells different.
Okay. Thank you for clarifying that for me. I don't have any more questions.
Thank you. Member Cates, do you have questions of Mr. Dunham?
Yeah, one question, Mr. Dunham. I think this has been covered, but I want to make sure that I understand this correctly. So in your modeling and your formulas, as you crunch the numbers, one thing it sounds like you didn't do was factor in the possibility that this gas that's escaping now could be brought to market under under the provisions we're talking about here. Is that right? So the question is, did you include the potential market gains from captured gases in your calculations?
No, sir, I did not.
And is there a reason for why that was the case? And I'm imagining that it's just simply not discussed in the industry, perhaps, but maybe there's more to it than that.
It wasn't my commission. My commission was to develop cost numbers. From an economist perspective, an economist would assume that if it was profitable to capture that gas and sell it, that industry would be doing it because industry's job is to make profits. But I honestly don't know how that works, and it wasn't part of our commission to do.
Got it. Okay. All right. Thank you for the testimony. Thanks.
Thank you.
Thank you, sir.
Member Bitzer, do you have questions of Mr. Dunham?
Just one, I want to follow Mr. Cates' line of questioning there because I believe we heard earlier in testimony that the recapture, resale, recoupment was like 300 million potentially. Does that sound realistic to you?
I have no idea, sir. I didn't look at that. And it would depend very much on the price of gas at the time.
That's all I have.
All right, thank you. Member Duval?
No questions, thanks.
Thank you. Member Garcia?
Yes, thank you. I just have one question. So, Mr. Dunham, I appreciate that you're being candid in recognizing the mistake on the number of wells. I appreciate that very much. And that you've recalculated or given an estimate. So it looks like the cost estimates between NMED and you are coming closer together, but there's still, let me see if I have this correct. NMED's cost estimate is 1.7 billion and yours is now 2.3. Did I get that right?
Roughly that. I don't have that actual. I'd have to run through that cost model, but roughly that.
Okay. I guess I have one more question. Is one of the things that seems to be in contention is whether you amortize this cost over 15 years or I think you use 5 years. Could you explain why you use 5 years?
Yeah, 5 years is pretty much the life of an oil or natural gas well. Roughly 85% of its production occurs over its first 5 years for virtually all of these facilities. So that's why I use 5 years. 15 years is kind of a random number too. It is what OMB says to use to discount when you're doing discounting for future costs or revenues. And that's just to standardize their reports. There's no hard and fast rule why one would use that. And to be honest, right now interest rates are so low. I mean, I think I use 3.5%, which is kind of junk bond rates. It doesn't make a huge bit of difference if you go out 5 years or 15, or because your interest rate's not really bringing the numbers down that much.
Okay, thank you very much. That helps. Thank you.
Member Honker, do you have questions of Mr. Dunham?
No questions, thank you.
All right, thank you. Mr. Heiser, will there be redirect?
Madam Hearing Officer, I'm spinning, okay. Just one question, and I think, Mr. Dunham, there's confusion about 15 versus 5 years and averaging periods. There's a total cost, right, of capital cost, and you can divide that
Yes,
over
sir.
5 years, or you can divide it over 15 years. Obviously, if you divide it over 5 years, the cost for each of the 5 years is greater. If you divide it over the 15 years, the cost is less. Is that correct?
The annual cost, yes. But the total cost really is only going to differ depending on the discounting that you do, right? So a dollar in the future is worth less than a dollar today,
Correct.
right? So if I'm building something 10 years from now, it's $100 in current dollars. It'll be $100 in nominal dollars. 10 years from now, it'll be worth less today.
Right. And so the major difference then is just whatever that discount rate is that you're
Whatever
using.
that discount rate is.
Okay.
Yeah.
I think,
and right now, again, interest rates are very low.
all right. I know that I am tired of 5 and 15 years issues, so I will end my question on that and turn it back over to you, Madam Hearing Officer.
Thank you very much, Mr. Heiser and Mr. Dunham. If you would remove your presentation there.
Okay.
There we go.
There we go.
Terrific. Thank you. Ms. Katz?
Great. Thank you, ma'am.
Thank you. There you are. Do I understand from the spreadsheet that we'll be returning to the department for the next topic?
Yes, Madam Hearing Officer. Finally, we will come around to the department for the small business facilities definition and provisions topic. The department will call Susan Day and Elizabeth Bisbee Keene, as well as for the direct and rebuttal summary, as well as Brian Palmer also for the rebuttal summary.
All right. And will there be slides, and who will be driving them?
I believe there will be, but I can't remember. Sorry. I think there are. Maybe.
There are slides, and I'll be sharing. Thank you.
All right. So go ahead, Ms. Katz. I've already sworn all of your witnesses under oath, so please go ahead.
Let me just make sure they're all on the screen. I do not see Mr. Palmer at the moment.
And I do still need sharing privileges. Thank you.
Okay. So this, for the board's information, this testimony is appearing at, the direct testimony is at NMED Exhibit 102. That's Ms. Day and Ms. Keene's testimony. And then the rebuttal testimony, which includes Ms. Day, Ms. Keene, and Mr. Palmer, is at NMED Rebuttal Exhibit 1. Okay. Ms. Day, let me start with you. Have you submitted pre-filed direct testimony on the small business facilities provisions in this proceeding?
Yes, I have.
And your full written direct testimony appears as NMED Exhibit 102?
Yes, it does.
Do you have any changes to your written testimony?
I do not.
And do you adopt your testimony here today?
Yes, I do.
Ms. Keene, did you submit pre-filed direct and rebuttal testimony on the small business facilities provisions?
Yes, I did.
and your full written direct testimony appears as NMED Exhibit 102, and your full written rebuttal testimony on that topic appears in NMED Rebuttal Exhibit 1.
Yes.
Thank you. Do you have any changes to your written testimony?
I do not.
And do you adopt your written testimony here today?
Yes.
All right. Ms. Day, can you please summarize the data analysis you conducted for the small business facility definition?
Yes, I prepared the analysis to provide NMED with information on the revenues and employment for the global ultimate parent companies, excuse me, of the well owners, operators that would be subject to the proposed new ozone rules. NMED needed these data as the basis for developing the small business facility definition. I started with a list of 535 owner-operators provided by NMED, which was compiled from the NMED equipment data and the New Mexico Oil Conservation Division data. Excuse me. Because the small business facility definition applies to the entity at the highest level of ownership in the corporate structure, I needed to identify the global ultimate parent companies associated with each of these owner-operators. In order to link the owner-operators to their global ultimate parent company, I submitted the list of 535 owner-operators to a vendor called Nyquist Association LLC, or Nyquist Association. And just to explain, Nyquist stands for North American Industry Classification System. Nyquist Association uses Dun & Bradstreet data to link each owner-operator to its global ultimate parent company. Dun & Bradstreet is a corporation that provides financial and other information on businesses. It's well known for creating a data universal numbering system, or DUNS number, that uniquely identifies more than 100 million companies around the globe. Nyquist Association locates the owner-operator in their database using name and address matching. Once they locate the owner-operator in their database, they know the DUNS number associated with the owner-operator. Using the owner-operator DUNS number, they then attempt to provide the identity of the global ultimate parent, as well as the global ultimate parent's DUNS number, NAICS code, revenues, and employment. Nyquist Association used a matching algorithm to identify each New Mexico owner-operator or other affected facility in their data. This algorithm assigns a level of confidence to each match. Only matches with a high level of confidence were retained, which results in Nyquist Association matching 460 of the New Mexico owner-operators in their data. A detailed explanation of how the matching algorithm works can be found in my direct testimony. Nyquist Association then identified a global ultimate parent company associated with 460 of the 535 New Mexico owner-operators provided by NMED and OCD.
Stay, are you still speaking?
Sorry, I'm just talking to myself because I didn't unmute myself. um, sorry. Ms. Day, did you include the Federal Small Business Administration or SBA size standard for potentially affected owners and operators in your analysis?
Yes, I did. For context in this rulemaking, I included the SBA size standards for potentially affected owner-operators and other facilities. SBA created these size standards to identify companies that qualify for federal assistance programs. They're intended to reflect the degree of competition within individual industries so that less competitive firms would qualify for assistance. SBA size standards vary by industry type as defined by a NAICS code to reflect the unique competitive characteristics of different industries. In some cases, SBA uses a revenue standard. In other cases, the size standard is based on the number of employees. I used global ultimate parent company information identified for each facility to determine how that global ultimate parent would be classified based on the SBA size definition. In order to do this, I needed NAICS code, revenue, and employment data. Not all global ultimate parents had both revenue and employment data. I counted 406 unique ultimate parents with both revenue and employment data. Of the 406 unique global ultimate parent companies, I found that 355 or 87% meet the SBA definition of small business, and 51 or 13% do not meet that definition. The 355 small global ultimate parent companies are associated with 359 small owner operators, and the 51 not small global ultimate parent companies are associated with 77 not small owner operators.
And did you estimate revenues per well and total gas and oil per well?
Yes, I calculated an estimate of value per well using two methods. For both methods, I used oil and gas well production data for New Mexico owner-operators and other affected facilities from the GoTech website. These data include information on the total number of wells per owner-operator, as well as the total 1,000 standard cubic feet of gas and barrels of oil produced by the owner-operator in the 18-month time period between January 2019 and June 2020. Production data were available for 399 or 75% of the 535 owner-operators. In method one, I estimated average revenue per well for each owner-operator by dividing the global ultimate parent revenues associated with the owner-operator by the total number of wells reported in the GoTech data for that owner-operator. In method two, I estimated the average value of the oil and gas production per well for each owner-operator using dollars per barrel for oil and dollars per million BTU for gas. The prices I used were the New Mexico crude oil first purchase price, which was $45 per barrel, and they'll note this is a 24-month average over the period of February 2019 to January 2021. And the Henry Hub natural gas spot price, which was $2.39 per million BTU. This is also a 24-month average, but over the period of March 2019 to February 2021. I estimated the average oil and gas value per well by calculating the total production value, and that's oil and gas combined, for all wells owned by each owner-operator, then dividing that value by the total number of wells per owner-operator as reported in the GoTech data.
Thank you, Ms. Day. Ms. Keene, turning to you, can you provide the proposed definition of a small business facility?
Yes, under the proposed rule, a small business facility is defined as a source that is independently owned or operated by a company that is not a subsidiary or a division of another business that employs no more than 10 employees at any time during the calendar year, and that has a gross annual revenue of less than $250,000. And employees include part-time, temporary, or limited service workers.
And can you provide an overview of the proposed requirements of Part 50?
Yes, Part 50 is structured in a way that there's a baseline set of requirements applicable to all owners and operators, and then a tiered set of requirements that apply based upon the equipment or the source type, the PTE of the equipment or source, and whether a facility meets the definition of a small business facility as defined in this rule. It's important to note that there are numerous ways for the rule to apply or to not apply. it's also important to note, if you are in the rule, there are other applicability thresholds in each section that determine that, that applicability. First of all, everyone is required to calculate the potential to emit of equipment and have that calculation certified by a professional or in-house engineer, and conduct leak monitoring and repair requirements by specified deadlines, and that monitoring frequency is determined by the facility PTE.
Can you provide an overview of the requirements for small business facilities?
Yes, an owner or operator of a facility that meets the definition of a small business facility must comply with those requirements that I just listed, and separate set of requirements in section 125. And again, if a facility does not meet the definition of a small business facility, the owner or operator would need to comply with the other sections of Part 50 to the extent that those sections actually apply to that operation.
And Ms. Keene, can you discuss why the definition of a small business facility is appropriate in the department's view?
Yes, the department developed the definition of a small business facility to recognize the unique challenges smaller independent operators may face in determining applicability of regulations and financing the initial and ongoing costs of compliance. Both the Federal Clean Air Act, and I'll speak to this later as well, and the board's air quality permit rules provide a definition of small business that's similar to that. And that's the slide that I'm on. So let me just say that again. The Federal Clean Air Act and the board's air quality construction permit fee regulations at Part 75 contain provisions to assist small businesses by providing compliance assistance and a tiered fee schedule that gives a 50% reduction in initial and annual permit fees. And these programs were developed because small businesses frequently lack the financial resources necessary to evaluate regulations and finance those costs, and to pay the full cost of recurring permit fees.
Thank you. And can you summarize for the board the basis for the proposed definition in Part 50 for small business facilities?
Yes. The proposed definition is based upon 3 principal criteria that help delineate between small independent businesses and large vertically integrated companies. And the first criterion is ownership structure, which was used to distinguish companies that are independently owned and operated from those that are not a subsidiary or a division of another company from larger corporations. The difference, importantly, between small and large companies include the size of the business, the number of employees, revenue, legal structures, and financing and tax requirements. Small and large companies may operate within the same industrial sector. However, the differences in how these companies operate and their ability to finance and access capital and their overall size can affect their operations.
Thank you.
The second criterion is the number of staff employed by the company, which is an indication of the company's personnel and staff resources capacity to interpret and implement the requirements of the rule. Larger companies have the financing capacity to employ dedicated environmental health and safety specialists. These staff are the staff that typically monitor the company's compliance with numerous state and federal environmental regulations and other regulations. Small companies employing fewer numbers of employees typically do not have the staffing or financial capacity to finance dedicated environmental compliance specialists. And the third criterion is annual revenue. The department recognizes that the cost of complying with Part 50 may disproportionately impact the smallest companies and may result in early abandonment of small business-owned wells, which in turn may result in increased uncontrolled air emissions from abandoned wells.
Can you explain how the department developed the thresholds in the definition of small business facility?
The department evaluated the report prepared by ERG and sorted the companies by the annual global ultimate parent revenue and staffing levels. The proposed thresholds were chosen because the data compiled by ERG indicated that those thresholds balanced the costs of compliance with Part 50 against a company's ability to finance the costs of compliance and would not put the majority of companies at risk of becoming insolvent and therefore cause wells to be abandoned without remediation.
And can you provide a summary of the department's analysis and the cost of compliance for a representative facility?
Yes, the department estimated the annual average cost of compliance for a representative well site to determine the number of companies that could finance those compliance costs. A representative facility was developed and was assumed to have emissions greater than 15 tons per year of VOC, thus requiring quarterly LDAR monitoring, a storage vessel emitting greater than 2 tons per year, requiring a control device, and an annual inspection of the storage vessel. The annual average cost of compliance for the representative facility was estimated at $37,945 based on an average cost of $32,400 to control a storage vessel, around $4,300 for quarterly LDAR monitoring, and $1,100 for an annual inspection.
And can you discuss the results in comparison to the estimated total revenue?
The department ranked the companies by the GOLT revenue from the highest to lowest revenue and screened those companies that reported $1 million or less and $250,000 or less to determine how many of these companies had per well site revenue less than the estimated cost of compliance for the representative facility. The department determined that 96 companies reported a GOLT revenue of $100 million or less and had a calculated revenue per well less than $37,945. These 96 companies operate approximately 9,200 wells, or 18% of the total wells. The department then determined that 54 companies reporting a GOLT revenue of $250,000 and less had a calculated revenue per well less than $37,945. Again, that's the estimated cost of compliance for the representative facility. And these companies operate approximately 4,600 wells, or 9% of total wells.
Thank you. So can you now walk the board through the proposed requirements of the rule in section 125 for small business facilities?
So NMED determined the average annual cost of compliance for a facility meeting the small business definition at $4,300 based on a conservative quarterly LDAR monitoring requirement. According to the report, few companies have a revenue of less than $4,300 per well. NMED proposed the $250,000 threshold as the revenue threshold to meet the small business definition. 82 companies that operate those 4,600 wells would qualify as a small business facility under the threshold established in the rule. 15% of the total number of companies subject to Part 50 would be considered owners or operators of small business facilities, and 9% of the total wells would be considered small business facilities. We also estimated revenue from a well producing 7.5 barrels of oil per day to give the board an idea of what those annual estimated revenues are for some of the smaller wells. That arithmetic is available here. We have estimated 7.5 barrels of oil per day, 365 days of year at $60 a barrel of crude oil as $164,250 per year, or $450 per day. And comparing this estimated revenue with the estimated cost of complying with the small business provisions of Part 50 would cost companies approximately 2.6% of their total revenue to comply. And this estimated cost of compliance, again, for the representative facility was $37,945 as a percentage of the total estimated revenue is approximately 23% of total revenue.
Thank you, Ms. Keen. And at this point, sorry, you're not finished.
Yeah, and so here we have the definition of the small business facility as previously discussed, and we have the section of the Rule 125 that contains the provisions for those facilities that qualify as a small business. And so, as you can see, their owners and operators are required to ensure that all equipment is operated and maintained consistent with manufacturer specifications. The owner operator is required to calculate VOC and NOx emissions from the facility on an annual basis. And that calculation shall be based on the actual production or processing rates of the facility. We also require a company-wide database to track VOC and NOx emissions for all subject sources. And to comply with the requirements of the monitoring requirements of subsection C or D, which we'll hear later at this rulemaking hearing, those are the provisions of the fugitive emission and leak detection requirements. The record-keeping requirements include an annual certification demonstrating that the company continues to meet that definition, the calculated annual emissions from each facility, and a company-wide annual VOC and NOx emission calculation for all subject facilities. And the reporting requirements include the reporting of the initial small business certification within 60 days of the effective date of this part, and then by March 1st each calendar year thereafter.
Thank you, Ms. Keen. And I do want to ask you if we received any from any of the other parties changes to our thresholds in the small business definition, or if they took issue specifically with the data that we provided associated with that definition in any of their direct or rebuttal testimony.
No, the other parties have not provided specific feedback on the cost estimates that we have prepared, the thresholds that have been set. We have requested feedback on the definition and this concept numerous times, and we have not received that engagement from the other parties. And we really do need engagement with this concept in order to right size this definition. And without that engagement, it has not moved the concept forward in a meaningful way.
Thank you. That is all for the summary on the direct and rebuttal.
All right, thank you, Ms. Katz, Ms. Keen, and Ms. Day. We will turn to questioning. Ms. Fox, do you have questions of the panel?
Thank you, Madam Hearing Officer.
Ms. Pranos?
Thank you, Madam Hearing Officer. I have no questions.
Thank you. Mr. James?
Thank you, Madam Hearing Officer. We have no questions.
Thank you. Mr. Bohr may not be with us. Mr. Nyquist?
No questions, thank you.
Thank you. Mr. DeSalen?
No questions, thank you.
Thank you. Mr. Heiser?
Madam Hearing Officer, I just have one question, I think probably for Ms. Keen. Ms. Keen, when you were looking at this, did the department give any consideration, or how did you address under 14-4A-3 sub direction that a small business means a business entity including affiliates that employs 50 or fewer full-time employees, and that using that 50 compared to the 10 that you ended up with?
Certainly, and I'm not exactly sure what statute that if that's the state small business statute.
It's the state, yes, it's the State Small Business Regulatory Relief Act. I'm sorry, I should have said that at the beginning.
Sure, thank you. Yes, and so that does provide an example of one threshold that has been established under a state statute, and that may be appropriate in certain applications. Here, we need to balance the need for strong emission reductions with the number of companies that would qualify as a small business. So this was really tailored towards the companies that we have operating here.
Did you look at how many companies might qualify under this alternative 50 employee from the state act definition?
I think that may be covered in another question in the next round of rebuttal.
Okay, thank you. We'll look forward to that then. Appreciate, as always, your insights. Thank you.
Thank you, Mr. Heiser. Mr. Rose, do you have questions?
I do. Let me make sure that, I don't know if I ought to let you see me on video, but this late in the day, but, and I'm not sure exactly who this should go to, so I'll let Ms. Keene or Ms. Day decide between them how to answer this. My understanding is that the proposal is predicated on two pieces: the number of employees and the gross revenues. As to the number of employees, does the rule define, or have you evaluated what would constitute an employee for purposes of this section?
We have included in the definition what should be considered employees.
Would that include contractors, contract employees?
It would not, I believe, include contract employees. I don't believe that was the intent, to include contract employees.
For example, if a company were to decide that a function that could be performed by an employee of the company, but decided to contract that responsibility to a third-party contractor, would the third-party contractor and their employees count towards the count of number of employees?
I don't have an answer for that right now. I think I'll have to think about that question and return to that question.
Thank you. In terms of the gross revenue provision, and I think you explained, or Ms. Day did, the assumptions that went into that. And I think you testified that there would be a certification that would be performed by these companies on an annual basis. Is that, I was trying to figure out that if, for example, price of the commodity was such that they exceeded the gross revenue threshold in a given year, if they could not certify that they were a small business at the certification point, would then they be in violation for the previous year and not adhering to some of the requirements? Or would the responsibility be prospective from that point on till the next year? It's not clear exactly when the obligation to meet requirements that they would be exempted from would suddenly become applicable.
Thank you for that question. And that's exactly the type of issue that we needed feedback on when we developed this concept. And there are certainly ways to resolve that with indexing with the market, with a commodity price, or other options, but that we simply have not received any engagement on this concept. And so we have not been able to kind of address those questions.
I take it, Ms. Keene, you've not referred to Mr. Davis's rebuttal testimony or the discussions that your counsels had with me concerning that definition as being engagement?
We haven't received significant, meaningful engagement on the data in any way. There may have been conversations I'm not aware of that occurred between counsel, but I'm not privy to those conversations.
And I take it that the small business definition that you're proposing, or that you did propose, was first available when the department proposed its rules to the board, correct? That the discussion, a version of these rules that was out earlier, initially before the department's petition, did not have a similar small business exemption, did it?
It did not.
Okay, so did the department engage with the industry or the affected, potentially affected small businesses when it originally decided to propose a small business definition?
We did not specifically engage with small businesses on the concept.
Okay, thank you. And with respect to the employee number cutoff, it wasn't clear, and maybe I just missed it, as to why the decision was made on the cutoff number that you're proposing here, where that came from.
The 10 employees, again, was a proposal to be meant to be a starting point on this definition, with the expectation that the owners and operators, that the stakeholders would engage with the definition. That the permitting regulation that I cited previously has that same employee threshold.
But those thresholds only apply to facilities that are subject to the permitting program, correct?
That's correct.
As it currently exists. And do you know whether most well sites in fact qualify for permitting or are subject to air quality permitting under Part 72?
It depends on the production and equipment and emissions data.
Have you evaluated what percentage of those wells are currently subject to either the NOI or the permitting requirements?
We do have that. I don't have those numbers right in front of me, but we could provide that data.
Okay, thank you. I have no further questions, Madam Hearing Officer.
Thank you, Mr. Rose. Mr. Jano, do you have questions?
No questions, Madam Hearing Officer. Thank you.
Thank you. Mr. Boutier?
No questions, thank you.
Thank you. Ms. Gutierrez?
No questions, thank you.
Thank you. Mr. Colclisher?
No question, thank you.
Thank you. And Ms. Witherspoon?
No questions, thank you.
Thank you. I'll turn now to the board for their questions. While I'm doing that, in the event you are an attendee and would pose a question to the panel, please reach out in the chat. Madam Chair, do you have questions of Ms. Keene or Ms. Day?
Madam Hearing Officer, I don't have any questions.
Thank you. Vice Chair Trujillo Davis? Vice Chair Trujillo Davis, can you hear me?
I could hear you, but I apparently couldn't unmute. I do not have any questions. I apologize. Thank you.
All right, thank you. Member Cates?
No questions, thank you.
Thank you. Member Bitzer?
Just real quick, what is the fee that you're proposing to waive 50% of?
Thank you, Member Bitzer. That references to a construction permit fee regulation that exists. And
Is it a variable fee depending on factors then?
correct. There's not a rule, there's not a fee associated with this rule, but there is a permit, an annual initial permit fee, an annual permit fee for air permits. And the annual permit fee is indexed to the CPI.
Okay, so it changes from year to year, goes up a bit, maybe a bit more next year. And you're proposing to waive half of that for the small businesses.
That's not correct. The concept of the small business facility was the definition includes two thresholds. One is a revenue-based threshold, and the second is an employee number threshold. And the limit is 10 employees. And that number of 10 employees was derived from another regulation, and which is the construction permit fee regulation. And so we simply modeled that part of the definition after the construction permit fee regulation.
So if I'm understanding your proposal correctly, you propose to waive a portion of that fee for bona fide small businesses.
We're proposing to requirements for facilities that qualify as a small business facility, and there is no fee associated with this rule.
Okay, I was just trying to figure out what we were actually talking about there. That's all I have. Thank you.
Thank you. Member Duvall.
No questions.
Thank you. Member Garcia.
Yes, thank you. I do have a question for Ms. Keene. So what I'm understanding is with your proposal on the small business exceptions or changes for small businesses, you did not receive feedback from the industry in order to make changes to the rule. For instance, in the last version, which was September 16th, that does not reflect any feedback from the industry on this provision, right?
That's correct.
Okay, so it sounds like you're getting some feedback now. At least Mr. Rose suggested some questions about this. So might you then make some changes to this rule again based on the feedback you get during this hearing?
I think we would be very supportive of making right-sizing this definition to meet the intent of the definition, which is to provide a tiered set of requirements and provide regulatory relief for those true small businesses while also securing the necessary emissions reductions. And so this definition is intended to balance those two.
I have, Madam Hearing Officer.
Thank you, Member Garcia. Member Honker.
No questions. Thank you.
All right, thank you. Ms. Katz, will there be any redirect?
Yes, Madam Hearing Officer, I have just a few questions for Ms. Keene. Ms. Keene, did we make the proposed definition of small business facilities available with our petition for rulemaking?
Yes, we did.
And we made the data on which that definition was based available at the end of May, correct?
That's right.
And so has IPA&M had over 4 months to evaluate that data and the proposed language of the definition and the concepts and provide suggestions to us?
Yes.
And has IPA&M had 2 opportunities to submit written pre-filed technical testimony on this topic?
Yes.
And do you recall any testimony raising the issue regarding contract employees in either their direct or rebuttal testimony?
No.
And has IPA&M or any party submitted any proposed changes to the small business definition in their technical testimony, which is required under the board's rulemaking procedure?
No.
Do conversations between council constitute testimony that the department and the board can take into account when deciding what provisions of a rule to adopt?
No.
Can you explain why the previous approach of exempting stripper wells and marginal wells was rejected in favor of this small business facility approach?
Yes. That proposal contained a low PTE exemption and a stripper well exemption. And between those 2 exemptions, they simply left too many emissions on the table and exempted too many wells from the requirements to reduce emissions under this rule. And this definition was an attempt to balance those 2 those two needs to provide some necessary regulatory relief to act to true independent small operators and secure meaningful emission reductions from those wells.
And so it wouldn't be true that only smaller independent operators would be owners of stripper wells or marginal wells, correct?
That's correct.
Okay, thank you. That's all I have.
Okay. Thank you very much, Ms. Katz, Ms. Keen, and Ms. Day. I know, Ms. Day, it's been a long day for you and night. If there's no reason not to excuse the panel, we will do that. Thank you all.
I cannot have them excused just yet because there is Sir rebuttal on this.
Okay. So
unfortunately, this day has to continue into the wee hours here.
Okay. I'm sorry. I meant excuse them until after we hear from Mr. Smitherman and Mr. Davis. Is that all right? Great. Thank you, ladies. I'm going to.
Madam Hearing Officer.
Yes.
This is Eric Heiser for NMOGA. IPA New Mexico has the lead on the small business issue for industry, and so it might be best to start with IPA rather than us. We're sort of more Me Too.
All right. And so that was Mr. Davis, right?
Correct, Madam Hearing Officer.
All right. I trust, I'm sure I made him a panelist at some point. Do I need to make him a panelist again? No, there he is. Okay. Terrific. Mr. Davis, you're still under oath. Mr. Rose, go ahead.
Thank you, Madam Hearing Officer. Mr. Davis, we've already qualified you in terms of your experience, and we've identified yesterday that you provided direct and rebuttal testimony. Does your direct testimony, IPA Exhibit 2, include your testimony related to the proposed small business definition and exemption?
Yes, sir, it does.
Doesn't look like his. There you go. And does your rebuttal testimony, which we've identified, I think it has been admitted as IPA and M 10, include your rebuttal testimony with respect to the small business definition and exemption provision?
Yes, sir, it does.
Could you briefly summarize your direct and rebuttal testimony for the board, please?
Yes, sir, I can. So in my direct and also rebuttal, I provided my understanding of the department's drafted provisions for the small business facility definition, as well as the provisions for the small business facilities. During the direct, we were unable, we followed the spreadsheet that was provided, but wasn't until we seen the department's direct testimony that we fully understood the analysis that they undertook to develop those thresholds. In reviewing the provisions, it's evident that the department intended to reduce the requirements applicable to small businesses in New Mexico. While the IPNM is supportive of this reduction in requirements applicable to small businesses and stripper wells in the state, we do not believe that it provided that the proposal effectively accomplished that objective. And the first thing to note was the 10 employee cutoff. We felt this was very limiting and testified to that effect, and that we felt this would exclude many of the smaller operators that are in need of relief from some of these provisions. In my rebuttal testimony, I referenced the Small Business Regulatory Relief Act, which Mr. Heiser brought up earlier, defines a small business as an entity that employs 50 or fewer full-time employees. Moving to the gross revenue cutoff, we also felt that this was very limiting, and our biggest concern with the gross revenue threshold is that it's tied to commodity prices, which are dependent on market conditions. The variability with commodity pricing creates a lack of regulatory certainty there for the regulated community. We felt like this was not a good measure of the profitability of the operators or producers, and that the gross revenue does not include operating expenses or capital expenditures that operators or producers are going to have. As I mentioned before, it wasn't until I was able to review the direct testimony of Susan Day that I fully understood the extent of the effort the department had went through to define the thresholds for a small business facility. I do want to commend the department for the extensive analysis that was performed there. But from my understanding, the department established the $250,000 gross revenue cutoff based on a operator's average well revenue being less than the cost of compliance. So in essence, what they were doing with that cutoff was providing relief for operators in which all of their wells would not be able to support the cost of compliance, which does provide some relief for a very small group of operators and prevents them from being insolvent due to the cost of compliance. But it doesn't provide the appropriate relief for small businesses or stripper wells in the state of New Mexico. First off, the average cost of compliance that the department used or ERG used in the analysis did not include any cost of compliance with pneumatic controllers and pumps that are in section 122. And this is something that IPNM has had significant concerns on, and we will address later. Secondly, this only provides relief, again, as I stated, for companies who operate a small number of wells in which on average, those wells cannot support the cost of compliance. There are many operators, many members of IPNM who operate a large number of stripper wells, and the operators make a economic decision on a well by well basis. We're not going to absorb the cost of compliance on one well if it can't support that cost by another well's revenue. We look at wells on an individual basis. And so for that reason, we have significant concerns that there are thousands of wells that would be prematurely plugged and abandoned due to the provisions that are in the proposed rule. One of the things that I did after reviewing Ms. Day's testimony is I took a look at the well count and production data that was used by ERG in their analysis and ran the same gross revenue calculations. And it was very difficult, I found, to find a natural break in terms of gross revenue. The main takeaway from looking at that data was, the higher percentage of stripper wells that an operator had, the higher percentage of gross revenue would be taken up for the cost of compliance. And we stress this both in direct and in rebuttal that we believe this relief needs to be based on individual wells, and that we believe a well's production and or potential to emit are better measures to base the appropriate relief on. And again, this is due to the fact that we make economic decisions on a well by well basis.
Madam Hearing Officer, I think cleaner advocates would like to object to all this testimony and move to strike it on relevance grounds. There's been no proposal put forward on this provision by IPNM, A&M, or anyone else. It's effectively a stipulated proposal. Parties have a chance to suggest alternatives, and IPA&M did not, so we think that has been waived. I'm not sure why we're here.
Thank you, Mr. Bach. Mr. Rose, your response?
Madam Hearing Officer, in fact, IPNM did propose alternatives, including striking the small business proposal. The testimony is in response to a department proposal, which the board can consider. It's not a stipulated proposal. IPNM did not agree to the proposed regulatory provision and is expressing its concern to the board in terms of the board making a decision on whether or not to adopt it. So we believe it's highly relevant, and we believe that the testimony should come in. We think it's relevant to the decision as to whether or not the board should adopt the department's small business definition and the exemptions for small businesses as well.
All right, thank you. Mr. Bach, the objection is overruled. I'd like to hear the testimony as rebuttal. Go ahead, Mr. Rose.
Thank you. Mr. Davis, had you finished your testimony in response, in your explanation of your rebuttal testimony?
No, sir. I have a little more I'd like to cover.
Could you go ahead and give the remainder of that testimony?
Yes, sir. So I was just getting to the proposal that IPNM had put forward. In our direct testimony, we had proposed to strike the small business definition and its provisions due to the fact that we did not believe this provide the necessary relief. After reviewing the direct testimony from the department, we came back and indicated that we felt like the pre-proposal draft structure based on production and PTE was the more suitable structure to provide relief for small business. And so that was where, in rebuttal, is where we made that recommendation of looking back to the relief being based on wells production or potential to emit. One of the things that we noted was the department had put that in the pre-proposal draft and then had removed it. In reviewing rebuttal testimony, the reason for removing that was they felt that it left a lot of wells unregulated. And I in rebuttal, highlighted the fact that the requirements that are set forth there still subject these wells to, as Ms. Keene said earlier, requirements for proper operation and maintenance of the equipment to reduce emissions, as well as complying with the fugitive requirements with the leak detection and repair under section 116. And then in addition to that, the operators have the requirements to calculate and maintain a company-wide database of the VOC and NOx emissions while being subject to the reporting requirements of section 112. These subset sections of the rule still apply to these wells, but we believe that the best structure to provide relief is based on the production and PTE, and these wells would still be subject to regulation and the associated emission reductions. And that concludes my summary.
Madam Hearing Officer, is it appropriate at this time for me to ask him to respond to the department's direct and rebuttal testimony, or will that be handled later?
Ms. Katz, do you have an opinion about that?
I'm sorry, I'm just a little bit confused. So Mr. Rose, are you saying, so this is supposed to be the summary of the direct and the rebuttal?
Correct. And the question is, am I permitted to question him in rebuttal in response to others' rebuttal and the department's testimony here, or would that occur later after others and have given their direct and rebuttal testimony. Wasn't clear to me exactly how we're scheduling Sir rebuttal at this point, or what could be labeled as Sir rebuttal.
Yeah, it's a little confusing, but I would think, so it would typically go that it would be the department and then whoever the parties that had all submitted the direct and rebuttal testimony, and then we would go in the opposite order for the Sir rebuttal. I'm okay if you want to do that here. I don't know if, I guess Namoga is, I'm not sure if they're planning to put Mr. Smitherman on or.
That's my understanding from the spreadsheet. So if you don't object, and Mr. Heiser doesn't object, I would just as soon take a Sir rebuttal now. Mr.
Yeah,
Heiser,
I agree.
Any
That's
objection?
fine with Namoga, Madam Hearing Officer. I think it's more expeditious.
All right, thank you very much. Go ahead. Thank you, Ms. Katz. Go ahead, Mr. Rose.
Thank you. Mr. Davis, have you reviewed the rebuttal testimony submitted by the department and other parties in this proceeding?
Yes, sir.
And did the department's rebuttal or other parties' rebuttal testimony on this issue change your or IPA&M's position on the acceptance and the propriety of the department's proposal?
No, sir.
Could you explain, please?
Reviewing, I'll focus primarily on the NMED rebuttal here. Looking at their rebuttal, it's Exhibit 1. As we read through there, the department did not support initially striking of the small business provisions. And specifically, as I walked through their rebuttal on page 99, the NMED agreed with IP&M that gross revenues are not a good measure of profitability, but pointed back to EPA guidance where direct compliance costs are sometimes used to compare to sales or gross revenues. Responding to that, while that practice may be, exists in a general sense, IP&M does not believe that that's the appropriate impact analysis for oil and gas operations in New Mexico. And throughout reviewing testimony, it's evident that the department based a lot of the provisions within this rule on Colorado Reg 7. And Colorado Reg 7 does have some blanket relief in there based on average per well production, regardless of the size of the company or revenue. And then similarly with Pennsylvania, I think it's worth noting that Pennsylvania has separate regulations for their conventional and unconventional operations or development. And with that, the Pennsylvania regulations provide relief for the low producing conventional production. So that's kind of my general response on the rebuttal. One other thing which has come out today in testimony as well is Namoga nor IP&M providing testimony addressing the data that was compiled by ERG, and that we didn't make any proposal back to the department, in terms of revisions to the definition. So my response there, the review of the data initially was not sufficient for us to fully understand how the department developed the basis for the definition. Again, once I was able to review the direct testimony there, I was able to follow the department's analysis. But everything that I've stated previously still applies. We still do not believe that those thresholds are really basis being on gross revenue is a good way to provide relief. We're very concerned that as commodity prices fluctuate, that an operator may find themselves subject to regulation. And this was included in my testimony.
Mr. Davis, just for clarification, and for those who aren't necessarily familiar with the jargon, can you explain the distinction that you drew on the Pennsylvania regulations between conventional and unconventional wells?
Yes, sir. So conventional production would be your vertical, kind of your legacy production. As we've moved into the modern development, we've moved into targeting what we call unconventional resource plays. These would be the shale plays where we've gone horizontally. We drill horizontal wells and put multi-stage fracture treatments on those wells. The distinction in Pennsylvania, specifically in their regulation, is the conventional versus unconventional. They regulate the more modern unconventional wells in a more strict manner. They're held to much higher standards than the older, lower producing conventional wells.
And with respect to employees, could you explain to the board, my understanding is you work for a company that has a limited number of employees. Could you explain how that might apply to your company or others in IPA&M?
Yes, so we looked at the data provided by the department, and looking at the companies based on the revenue cutoff. It was difficult to determine how the 250 or the 10 employees, provided relief for those operators that we consider small operators or small businesses in New Mexico. I worked for a third generation family owned and operated company here in Farmington. We've got 18 full-time employees, 5 part-time employees, and we operate 66 wells in New Mexico. And we would consider ourselves a small business, and we would not qualify for that small business exemption. And then, just as an example, there are other companies that are similar family-owned companies that have over 100 employees, operate 1,000 wells. But when you look at their average daily production, it's in the range of 24, 25 MCF. So they're operating a bunch of stripper wells. They would not qualify on either side of this. But if you take their gross revenue and their cost of compliance based on the average of $37,000 or almost $38,000, their cost of compliance is more than their gross annual revenue, which, yeah, again, those folks we feel like should see some relief, and they're not going to see any relief based on this provision being based on the number of employees and gross revenue.
Thank you, Madam Hearing Officer. I have no further questions.
All right, thank you, Mr. Rose and Mr. Davis. We need a short break before we begin public comment. So let's come back at 5. For those of you on the platform to offer public comment, I'll be calling you in this order: Adrienne Sandoval, Anna Hansen, Linda Birchfield, Karen Adams, and Anthony Cook. Let's come back at 5. Thank you.